apologize for some technical difficulties just now. Again, good morning, management, investor, and all participants online. I'm Bess Vayanon, Investor Relation. On behalf of Thai Union Group Public Company Limited, I would like to welcome you all to the Thai Union Group Knowledge Sharing Session on the topic of Thai Union, the pandemic, and the way forward. As the world is still affected heavily by COVID-19 in a way that we have never seen before, a lot of things that we have done have changed in our life, and Thai Union, who has the operation across 4 continents around the world, is inevitable for us to have to adapt to this new situation and adopting the new normal. So today, we have the opportunity to have Thai Union executives here with us to share with us the experience and of how we did in Thai Union and dealt with the COVID-19 and how we have become of this new normal and with operation. For the executive who are joining today is Mr. York Irie, our group CFO. Okay, and second one we have Kun Brian Rosenberg, the CEO of the Thai Union North America. And right, there he is. And we have Kun Paul Reenen, President of Thai Union Europe. And we have Kun Patrick Betalanfi, the Group Director of Strategy. Okay, this event will start the panel discussion approximately 40 minutes, and then we will be welcoming all of you to send any question online, or in your whether on the Microsoft Teams or Facebook Live. Please feel free to send in your question on the comment box, and toward the end of the panel discussion, we will raise it to our management here. Okay, without further ado, I would like to start the panel session now. As everyone knows, COVID-19 has been ravaging the world since the about the end first quarter of this year. And during the first wave, there has been a lot of things that Thai Union and our subsidiary around the world has been working to deal with it. So in this question, Yerk, back in February, March, when the COVID-19 started to surface, how did we exactly prepare ourselves in regard to safeguarding our people, operation, and the financial position?
Yeah, thanks a lot, Kun Best. Welcome everybody to this webcast. We dedicated this to our update on what did we do, what were the financial effects, what were operational effects, and I'm very, very happy to welcome some of my great colleagues. Brian in the US, I'm sure it's super late for you. Paul in Europe, it's super early for you. And Patrick, who is out of Singapore in a similar time zone. Look, and we have a couple of slides prepared for this section. We've shared over the last couple of months our immediate crisis response to this pandemic. We have, starting in February, established a crisis protocol. We have established in March a crisis cash preservation task force that meets every week. We've now moved it to a bi-weekly call. And look, the key focus areas are, of course, quite natural. Number one of cash preservation is capex reduction. So we were able to work with all our operating companies and address and get 25% reduction of actual capex spend. Some of it is, of course, just an extension of projects or a delay of projects. Some of it is just by nature. We couldn't get construction teams in some of our plants, so there's an automatic delay. And some of it is really reviewing again the necessity, the focus on our core business. And together with our opcos, this brought us 25% capex reduction. SG&A control is, of course, at the top of everything. Looking at travel expenses is one, that's the easiest solve. But also looking into advertising campaigns, are the campaigns done at the right time? Should they be phased over a period. The question of NPD, new product development. Is it the right time to launch this during a crisis, or should this be more timed than phased? So SG&A has been put completely under control, not by any radical cost cuts that we've implemented, but by being prudent, working with all our operators and doing the right things for protection of our employees, but also looking at the prudence of our P&L. One of the things we did extremely well was controlling our overdue receivables. We are reviewing key customers, people who may be delinquent, and we have not found any material issues in our receivables collection. We have not even seen a lot of delays, and some customers came back and said, "Can you help me out? Can you help us stretch this over a little bit of a period of time? Can we pay a little bit later? Can you help me during this crisis?" And we've really been ready to stand by our clients, our customers, also our suppliers, to help them during their cash challenges. And we feel this has led to even stronger customer relationships during this difficult period. Stringent inventory control, where we realized that revenue may not come as planned in the food service space, in the delivery to hospitality industry. Of course, we looked into inventories and to see where can we optimize. And in areas where we had a lot of growth in the ambient space, there was no control at all. There was really the attempt to put more inventory at play so we can serve all the demands. And of course, continued support to the local communities who were in need. A very strong and solid crisis response, and I'm sure Patrick will talk a little bit about that going forward. Next page. I talked about this in many of our previous calls, and I'm sure when we talk about Q3 results, this will be again the continuing theme. The ambient business is doing extremely well. People like the product. People find healthy seafood protein is beneficial for them during this crisis. It helps them prepare easy meals. And we see a lot of uptick in consumption. Paul and Brian will talk about this. And on the frozen side of our business, which is very heavily on F&B and hospitality, of course we saw some contraction, but the contraction was far less than what we had anticipated. We were well ahead of plans, and Brian will share with us that in some months, in some weeks, we are ahead of prior year because we take advantage and adapt it to the channel changes that we saw from an F&B channel, from a food service channel, to direct deliveries, to online, to grocery. So we really were able to adapt in a very agile way. And as a result, next page, and look, we presented this in our Q1 and Q2 results. We have a growth in our ambient business of around 16.5%. Amazing traction, and we were able to deliver and really have the factories charged up. We saw a contraction in the frozen business of around 10% in the first half year, but that is much less than what we feared in our financial stress tests when we analyzed our financial performance. So the frozen and chilled business is actually, with a minus 10%, doing much better than in many other areas. And then we have our pet care, value added, and other products that is growing at around 5.5%, and it's actually gaining traction and speed to grow even more. So maybe back to Kun Best to reflect on some of the others.
Okay, that's a good view from the top down, especially from the headquarter view. Good that we have Paul's here. I mean, with Europe being one of the first market of Thai Union that have been hit, I mean the major one, of course. Paul, may I ask you, how has the consumption pattern changed, and how did we cope with those changes in demand?
consumer behavior changed and how we responded accordingly. I mean, it's clearly now evidence. You know, the lockdown in mid-March was exceptional. We saw demand double in that period over a 4-week period. You've seen the photographs of out of stocks, empty shelves, etc. And we had a number of priorities at that period. First of all, it was the balancing the sales and supply. You know, to keep that product moving, we had to be quite agile in terms of portfolio managing. We had to look at SKU portfolio. We concentrated very heavily on what we call a power 10 or power 15, the top selling SKUs, keep those in supply. We changed our promotional strategy. We either deferred or delayed or less deep. That's not to say we weren't promoting. We did promote in the second half, but certainly to ease supply, we relooked at our entire promotional strategy across multiple markets. And most importantly, you know, we looked at stock allocation. You can appreciate across Europe with multiple customers, small customers and very large customers. We took to Jörg's point, you know, a high regard on customer servicing. Service levels had to remain high, but we had to be fair as well. We tried to serve our clients as best as we possibly can by stock allocation. Very, very important in terms of, you know, we need to build those relationships and keep those relationships post the COVID crisis. In terms of customer mix management, we saw a very different behavior from shoppers. There was less frequent shopping by shoppers, therefore convenience and independence suffered as a result. And larger supermarkets benefited from it, including the discounters. People were spending less time in store. That had to be a factor, but it was bigger shopping. So instead of going to supermarkets, you know, 3-4 times a week, they were doing one very large shop once a week because of the risk profile of COVID. So that meant that the channel changed substantially, actually. We had to refocus our efforts into supermarkets and discounters. Of course, online was very, very buoyant. Online in the COVID period, I'll give an example. In the UK, the online grocery share is roughly 7 or 8%. It took about 10 years to grow that share. It doubled in 10 weeks. And that's the sort of, you know, the major customers readapted their network to service online much, much better. And we clearly benefit from that. The other behavior was pantry. I mean, obviously, as an ambient seafood branded business, you know, you would have panic buying, of course. You would have stocking in pantry, which is great for sellout. But our concern is consumption. The danger with pantry loading is, unlike the fridge or fridge freezer, it's not visited very often during a day. And our category would have a relatively low annual frequency, of possibly less than 10 in some markets. And therefore, our concern was, while we had significant buy-in, we weren't seeing consumption, and therefore we would miss the frequency, and therefore volume would decline. So we changed our brand strategy and our brand engagement very rapidly in that period, from you know, innovation support and brand saliency support to consumption. And there was a heavy emphasis on online, digital, and I'll show you some examples later. We activated all our influencers across Europe just to drive that consumption pattern in terms of destocking. And I'll show you the results later. And of course, there was a big thing about employee engagement. You know, we mobilized all our offices in Europe to be home working within 2 days. We had no loss in service. We had no loss in cases in terms of shipping. And obviously, we kept people engaged. So there was a huge emphasis on engagement during that period. You can appreciate some of our employees, you know, they're living in apartments that's quite small in some of the major cities in Europe. They may have family members there, they may have children there. So it's quite difficult to adjust into a home environment. And we really looked at mental health pretty substantially. Things like 1 day off every 3 weeks was designed specifically to take that pressure off. So I think we responded extremely fast to the lockdown. And then from mid-May, mid-July onwards, you know, we were preparing to reopen, but we had to reopen in a social distance safe environment. Therefore, protection of employees, in-store merchandisers, stock replenishment, was all very, very important to us. Incentives around stock replenishment and getting our customers going again. So there was a heavy emphasis during the summer period to restock and get fulfillment up. Some of our markets are very seasonal. So in Central Europe, that is our season. In Northern Europe, it's much more even throughout the year. We prepared to get our employees back to the office, which was great. And then, of course, in that period, while we were conserving cash during the lockdown, we felt that actually as people started to come back into store, it was a time to support our brands. And on our brands, emphasis changed slightly. Consumers were now they're looking for value all the time, but in a pandemic, they're looking for nutrition, well-being, safety, etc. And we saw very clearly is that the shopping time was reduced dramatically. They were going to supermarkets once a week, but they were spending less time. And in that less time environment, brands become very important because they become sort of a signal of trust, a signal of the category. And we saw pretty significant brand buoyancy in that period across Europe. Yes, there was private label growth as well, but overall our brands did quite well. We changed our emphasis to support nutrition and well-being, and of course convenience in some of our major markets like the UK, France, Germany. And I think that paid off in terms of just giving a different message in a very stressful period of people's lives. Now we're in sort of the current period. Home cooking and consumption driving is still very, very key. We are back supporting our innovation in the second half. We have a lot of innovation across Europe in 2020. We have a very strong H2. As I said earlier, we had to rephase our promotional investment into H2. Still commit to our customers in terms of promotional investment. That's very important. Power 10 SKU management, of course, and then stay with the major channels that were benefiting from it. And of course, at all times, look at employee engagement. We're just after finishing the annual employee engagement again. We're looking forward to those results just to see how we managed those employees through that crisis. The next number of charts best, I'll just show you some of the examples of how we drive consumption. Next chart, please. That's our Petit Navire brand in France. Online interaction, influencers, recipes, cooking classes, etc. Next slide, please. This is the John West in the UK. One of the points there, we very specific digital KPIs. We were looking for about 15 million impressions in 2020, and we got those impressions in March alone. That's the sheer scale of activity that was going online. And I think the feedback from consumers at that point was very strong. Just engage our consumers, keep the brand saliency high, keep the relevancy high, and just ease that consumption during that period. Over to you, Best.
Thank you very much for your view on the UK and Europe, of course. And when we are seeing the COVID-19 going to the US, Brian, I believe the food service was particularly vulnerable to the lockdown. How do we manage our frozen business in the US? Is there any increased collection or receivable risk from our vulnerable operators, and how do we manage that?
Thank you, Kuhn Best. Here in the US, I think many of you know, we have an ambient, largely branded business, and that has responded quite similarly to our European business that Paul has been discussing. So I'll focus more on our frozen refrigerated business in North America, which is a sizable commodity trading subsidiary, and it has very unique characteristics relative to ambient. So I'll focus my discussion on that. First of all, one of those differences is that unlike our ambient business, which is heavily skewed towards retail or consumer activity and demand, our perishable business is about 50% retail club store, which we would call consumer, right? And then 50% food service, which would be broadline distribution, restaurant chain business, cruise lines, things like that. So a very different mix of the business. So when COVID hit, we immediately identified a variety of key risk and opportunity areas that we were focused on. The first of which was very, very tight control of our inventory and taking action against our supply chain. In our perishable business, while Thai Union is a significant supplier of our U.S. operations chicken of the sea frozen foods, we have actually over 130 suppliers across countries all over the world in a variety of commodity groups. So we had to take immediate action against that supply chain. And really look at what was happening in terms of the changing dynamics. Our food service business effectively was shut down, and our retail business, there was clearly increased demand, right? So we had to pivot very, very quickly against all these different suppliers and purchase orders and shipments coming from all over the globe. So what we did was we mobilized, we delayed shipments, we expedited others. Obviously, we would have delayed our food service shipments from suppliers. We converted food service packs to retail packs. Wherever possible, we negotiated delayed payments with suppliers in order to maintain some level of cash preservation. So we were really very focused on that. We also, in terms of our inventory on hand and incoming, we had a very bifurcated approach with that because we had some of that inventory that was highly demanded, and then some that was not, was very illiquid at that time. So we went about a process of evaluating the inventory that was at risk. We then looked to convert it or liquidate it or divert it to our channels that were that could conceivably demand it more. A good example of that would be lobster. Lobster is a very expensive product. Our food service demand was pretty much halted during COVID. And so we pivoted very quickly and looked to divert that inventory and those products into our retail or our consumer channels. And we did it quite successfully. Jorg alluded to this. I think, another unique dynamic of our perishable business in North America is we have literally over 1,000 customers of all shapes and sizes. So what we needed to do within the food service channel is we had to really, really tighten down our credit activity. We implemented very, very strict credit policies, particularly as you would think on our food service accounts. We scrutinized any orders that were coming from that channel of trade, even up to me. We had a credit committee that we had put together, and every order that came in during the first month and a half, 2 months of COVID, we were scrutinizing extremely closely, making sure that we were getting payment, we were going COD, we were really conserving cash very much. And then we had a variety of team members that didn't have as much activity to do on the sales team. So we mobilized them to accelerate collections, to really work very closely with our accounting team during the outset of the crisis to make sure we were collecting as much money as we possibly could and watching against any potential risks that we had with customers. We also at the time partnered with our largest broadline food service distributor in the United States. We had a lot of inventory dedicated to them, and they really had come to a standstill. So we went into a process of moving off that inventory into other retail activity, consumer activity. And at sometimes that was painful for us, but they worked very closely with us. And as we made our way through the COVID crisis, they've responded very, very well as a partner. We've gotten relief on price contracts. We've gotten extension of contracts. We've gotten expanded distribution. So we work closely with them. I think Jorg mentioned some of that earlier, and they have worked very closely with us in kind. Another thing we did was really pivot towards consumer, and that balance we have, that 50-50 balance, really has served us very, very well during COVID. The seafood category in general has benefited quite a bit during the COVID crisis because other proteins early on were demand was outstripping supply. So seafood, perishable seafood was a beneficiary. For us, we really leveraged our relationships that we had in retail to be first solution around increased demand because there was a lot of volatility, a lot of increased activity, and we were the beneficiary of that. We also were able to take some of those challenged categories like lobster and ask those retail partners to support us first because we were suppliers of choice. So had some good response there. And then finally, we had some seasonal categories that really were responding very well in COVID in terms of demand. That would be seasonal categories like snow crab, like US domestic scallop production. And our team really leaned in from a supply chain standpoint and from a sales standpoint and really took advantage of those seasons. And we had big lift of our activity from the outset of COVID and really all the way through Q3. Best, I think that's it for that answer.
Wow, that's one very elaborated answer from both the European and the US market. Okay, I just go for the overview, a large picture again. Patrick, can you go quickly through the fact that did you see any logistic or supply chain disruption during the COVID-19 that affect Thai Union's scope operation?
Yeah, thank you, Kunbest. Fortunately, we've not seen any large-scale interruptions that have affected us at the group level. We did have a small number of cases at different sites across the globe, but we were able to manage through those without larger impact. We're able to do that through a combination of health and safety measures in our factories, as well as our ability to compensate production loss through our global footprint. Whenever we came across a potential case, we quickly enacted our relevant protocols to contact trace, isolate, and test employees with potential exposure. Since we had safety measures in place, such as social distancing and workforce separation, the effects on operations have been manageable, and we didn't see any large-scale spread in any of our factories. Now, there was one situation where we did encounter local disruption, which was in Ghana, as you know. There, a factory closure was imposed in parts of April and May. We were able, however, to compensate the loss of production in Ghana largely by shifting volumes to our other factories in Thailand, Seychelles, and Portugal. Of course, some disruption on selected products remained, but we were able to prevent any negative effects on a larger scale. This shows the strength and the importance of having a global supply chain network. I also want to recognize the great work that has been done by our factory and supply chain teams. Thank you.
A lot of things that's been going on, a lot of moving parts. And I mean, for the result of those strategy, I mean, Paul, I would like to go to Europe first. Europe seems to have gotten handle of COVID-19 relatively more quickly. Did you see any ambient seafood sales going down in second quarter due to the pent-up demand from the first quarter? Or is there any change to consumer preference now that we are kind of getting used to COVID-19?
Yeah, Kunbest, this is a single shot I want to show you. I'm sure some of you have seen this sort of curve before. This is from the French market. Very similar in the UK, Germany, Italy, in our main markets. That's the peak there. You know, sales double in that 4-week period in March, 100%. The orange line is the total category, and the blue line is our brand share in any particular market. Now, I suppose when we get into lockdown, I had a very clear KPI: maintain our absolute brand share. I mean, when demand is accelerating that fast, your brand share can slip very quickly. Supply, channel mix, portfolio mix. So we had a very clear KPI: maintain brand share as we rise fast, and we did that extremely well. You can see that from this particular chart. In sec, we slightly overtraded. And then when the lockdown finally passed over, we went into the second phase. That's when our brand campaigns kicked in, drive that consumption, drive that brand saliency, and you can see from that period we over-index in our brands versus the category. So we've seen actually some brand share growth over that period. Now, what we're seeing in the recent weeks is that pretty much harmonizing. We're pretty much, the category overall is pretty much in line with last year, and our brand shares index is 100%. So in other words, we're basically trading the same share as we did last year. So that's the softening. In some markets, we were seeing growth post the lockdown of between 7.5% and 16%. Our European business is strong year to date, around about those numbers. And that's now softening. We're seeing sort of category growth between 1 or 2% year on year. So there's a definitive change in behavior over that period. So in summary, maintain that share in accelerated demand and then drive for share growth post the lockdown for stability now. And that's where we find ourselves in the second half. That's not to say we won't drive hard on second half. We've very, very strong programs across multiple markets in Europe, all the way to the Christmas season. Best?
The demand continues to remain strong in Europe. Brian, I mean, the US is facing more tricky COVID recovery on the elongated recovery trend. And what is the current state of food service channel in North America, and how has it impacted our frozen business?
Well, I think, first of all, I wanted to share a little bit about our ambient very quickly, which you can see during the first half, we've had very, very strong results on our ambient business. Obviously, as Paul commented, there's pantry loading that has gone on, but our Thai Union brands have basically outperformed the category by 2.5 to 3 times during the COVID crisis. So really, really strong results. It's a testimony to our team from end to end, from our production team in Lions, our partners in Thailand, and then also our commercial team in the US. Really very, very strong results. And then as Jorg mentioned, we've really done some good work here in terms of our bounce back on the perishable side. We had this concentrated decline from mid-March to mid-April, but we've bounced back very, very nicely since then. And you see, obviously for first half results, we had some good performance. Bess, could you move to the next slide? As far as the food service industry in the US, and this is from third-party sources, and I've seen varying levels, but estimates are that COVID-related sales declines are estimated to exceed 240 billion US by the end of the year, and many operators are really not very optimistic about their full recovery over the next 6 months. So it's going to be a slow recovery in that industry, and that's really concentrated mostly in fine dining and with independent operators who have had difficulty making that migration into takeout and delivery business. Multi-unit national accounts, fast casual, concepts that have outdoor dining that are very well equipped for takeout and delivery, they've been more responsive and have recovered obviously better. An area that has been really hit hard, or a few areas, business and institution, where you think of like corporate commissaries, travel and leisure, cruise lines, theme parks, entertainment, sporting events, sporting venues, concert venues, they have been significantly impacted and still are significantly impacted, as everyone knows. We've also seen these regional inconsistencies depending on state, county, city regulations. So we're seeing variant activity all over the United States. California is weak, Florida is strong. So you really have to migrate and manage around that. And then I just wanted to give you some context. I talked about this 50-50 split of our business pre-COVID. Since April, you can see how our perishable business has migrated very heavily to retail. Now that you might think is natural because of the decline in food service, but I can also tell you that our business has really been quite strong. And so not only have we seen this decline, obviously, in food service, but we've seen some very significant growth out of this retail piece of our business, and our overall business has held up very, very well. Best?
All right. Thank you. We hear a lot of the word. Hello? Over those two conversations. But clearly our free cash flow during the second quarter has stayed the otherwise. The free cash flow of second quarter has been 6.7 billion Thai baht, or rough over $200 million. Jörg, I mean, how do we manage a strong free cash flow amid difficult circumstances?
Yeah, I guess it comes back to So even here we have technical topics about changing the battery on the microphone pack. Coming back to cash flow, look, in many ways. Number one, we have a very strong operating profit, and that is something we should not forget. We have an underlying profit that is very, very far ahead of plan. We've been able to manage CapEx. We are very diligent on collecting from customers. We, of course, help our suppliers where we can, but we manage our net working capital extremely well. And on top of this, we have an exceptional peak demand in our ambient seafood business, so we have a lot of inventory reduction in ambient. Plus, we have a lot of inventory reduction in our frozen business, especially in the US. And Brian, look, you and your team, you've done a lot to manage your own supply chain so that you do not get too much inventory into your warehouses that you can't sell. So you've been able to really adjust very quickly to the changing demand pattern. Our inventory has dropped, our net working capital is in tip-top shape, and all of this has helped us really during this period to preserve cash.
Next slide.
And look, on the back of this, I really want to highlight we've increased our dividend. We have a first half year dividend payout of nearly 60%. I'm actually quite proud that we have since many years now really a payout ratio that's at the absolute upper end of where we can pay. We can pay up to 60%, and we're very close to that every year. And if we look at the first half year 19, where we paid 25 satang per share, we're paying now 32 satang per share, is a very strong sign of our belief that our business is doing extremely well, and we believe our cash position is very strong. So, yeah, looking into the second half year, I'm sure we will see some good surprises.
All right. Patrick, I mean, how do we as a Thai Union manage through the COVID-19 pandemic? Is there anything that we change in our things we do every day?
Sure, thanks, Kunbest. As a food processor, we, of course, already operate to the highest standards of cleanliness and hygiene. But these standards were further bolstered in light of the COVID-19 pandemic. Starting in March, we've implemented a global group-wide policy to protect our employees and our operations. These policies included site protection measures, social distancing measures, factory safety measures, and comprehensive safety and cleaning drills across all of our sites globally. We all know that social distancing measures and wearing of protective equipment are key factors to protect our employees and to prevent the spread of the virus. But another point I want to highlight really is the clustering of the workforce, which in my opinion was a big factor to also protect our operations. By clustering the workforce, we have individual teams of workers that are smaller. So therefore, should a worker be affected by the virus, contact tracing was made easier and fewer people needed to be isolated and tested. So this was one contributing factor that made our operations much more resilient. In addition to what you see on this slide, we also put in place internal structures and processes to quickly react to any situation. Specifically, we managed our pandemic response through a cascading organization of crisis management teams, or CMTs. The CMT structure was put in place actually before the pandemic last year as a generic structure to deal with potential crises of all kinds. It has a corporate level, regional levels, and then CMTs in each and every Thai Union site globally. COVID-19 this year was the first situation where this new structure was applied and tested, and it worked really well. We started the cadence in March, and the teams met at a minimum weekly, in some cases daily, depending on need. And with this structure, we were able to quickly decide on policies, address issues, and then cascade decisions down to each site in a matter of hours. That's what we have done in COVID, in light of the pandemic, and we're still continuing with these measures.
Okay, there has clearly been a lot of things that we have done, and some of those has been already translated into the financial. But going forward, clearly there will be a lot of change going forward. So Paul, what did you and your team learn from this pandemic? How are you adjusting to this new normal? And is there any risks or challenges that Thai Union Ambient Seafood business have to really actually looking out forward going forward?
Yeah, I have a single page here just on learnings. I mean, and the first pillar there is it emphasizes Jörg's earlier point about the core business and the core usage, core consumers and core customers. I mean, the ability of the brand teams to be agile and just switch from annualized programs to monthly programs to national campaigns to regional campaigns to customer campaigns. I think we moved very, very fast. With some excellent service providers to help us do that. So I think that's been very, very strong. That link between shopping and consumption is underestimated. It's a very difficult thing sometimes to get in ambient business. It's not like chill business where you have a natural consumption behavior daily. So we have to watch that very, very closely. And I think we've done that very well. Second of all, customer relationships. I'm very proud to say post-COVID, our customers are very complimentary. We measure ourselves externally. We've something called the Advantage Group Score, where we rate our businesses on 6 criteria from customer relationship management all the way to category management. We peer measure ourselves against the multinationals like, Heinz Kraft, Nestle, etc. And we've a KPI to always be in the upper quartile. In some countries, we're actually number 1. We would be number 1 in Advantage Score in areas like innovation and sustainability. And we're certainly upper quartile on customer relationship management, and we're very proud of that. So that's something we sometimes we behave like multinational, but sometimes we're very entrepreneurial and we find that balance. So I think that's been strong. The third pillar there is the ability of the brands to adapt to new need states. I mean, post-COVID, we're seeing a definite shift towards well-being. Of course, it was always there, but it's really been amplified as such in terms of balanced lifestyle, active lifestyles, immunity, health protection, preventative food, etc. There's going to be more of that over the next number of years from our brands, but certainly we were well placed for some of that in terms of our comms program and our innovation. So that's helped us. And the last point is about, changing the distribution channels and adapting very quickly. Some channels suffered badly and some channels did very well, and we adapted. We boosted weighted distribution in those channels. We pushed online. We over-indexed in our share in terms of online. That's going to continue. I think that's to stay for 2020 and indeed into 21 H1. So I think we've been very strong. And the channels that we're suffering, we tried our best to sort of boost activity in those channels to take consumers back in terms of footfall. And the last thing to really, from a personal perspective, that employee engagement. I mean, they've been absolutely super. Over that period, we've had people clearly working from home, and indeed, we're not fully back at the office yet. We're less than 50% in most of our European offices. I think the response rate, the productivity rate, the sheer effort to get this thing done and manage through it, I think is a testament to our employees at Thai Union, and I'm particularly proud of that.
Okay, I believe that there is a lesson learned by the Ambient Seafood business in Europe, which could be applied all over the world. Brian, did your team and you learn anything out of this pandemic, and how are we going to prepare ourselves for the future upcoming risks or challenges?
Yeah, I want to echo Paul's comments because and I know we all feel this way. Our leadership team feels such pride in our team members. what we've done in North America and how we've rallied and responded throughout the crisis. We have a very resilient group, and I know we have that globally, but I couldn't be more proud of the work that our team has done. Speaking to the frozen side, because I think, again, Paul spoke to ambient, so I'll speak to some of our learnings on the perishable side of our business. I think in one hand, it really has reinforced our strengths. You know, we have this diversification to our customers and to our product portfolio across categories that really has boded quite well for us throughout the pandemic, and we know going forward it will serve us very well, whether that's that mix of food service and retail, or whether it's this diversity across commodity groups where lobster we were able to lean in on retail, or where in a snow crab category we've been able to really exploit that particular commodity during its season and really to the benefit of the organization and drive significant activity. Agility is a word that's used a lot today. I think agility is the perishable commodity trading business in the United States is inherently volatile. So I think that really prepared us very well for COVID. And we've really been able to mobilize across a number of fronts. You know, obviously we mobilized, like Paul said, in literally days. Our team was mobile. We're still mobile. We're still remote. 6.5 months later, we still have less than 10 people in our office because of the length of the pandemic here in the U.S. But another example of that would be quality assurance. We have our QA people. I mentioned we buy from all over the world. Our QA people are located all over the world, but they need to fly throughout geographies and during COVID, we've had the travel lockdown. So we've mobilized with third-party examination of all of our containers, all of our shipments coming from abroad, and we haven't had any interruptions in supplier quality from the beginning of the pandemic. So speaks very well to the agility of the company. In our industry, perishable seafood, there is outsourcing of storage, of logistics, warehousing, transportation. COVID has created a series of problems across that, whether it's ocean containers being delayed, port slowdowns, demurrage, which, you know, excessive costs associated with that freight, warehouses not having capacity because they're overloaded with inventory. So we had to divert product to different geographies, trucking shortages. All of that has uncovered a focus for us in the risks that are associated with logistics. So we have a strategic initiative that we implemented during Q3 that is really focused on how we mitigate future risks associated with the location and logistics of our products. And then finally, I think like everyone, we're dealing with this new normal. And we believe that these increased levels of home consumption of seafood will remain for some period of time. We've pivoted our activity and our resources, whether that's our people or our investment around e-com, around home meal kit delivery, some of those operators in that particular channel of trade. We've really leaned in on that, and we're doing more and more business there. We also have, as a commodity company, we've really started to diversify more and more into value added. So we've been doing a lot more of that activity for retail and for our club store business. And as it relates to food service, it's clear that a lot of food service operators are really looking to keep the back of house or the labor in their kitchens at a minimum. So Thai Union, we have our global food service team. This is a team of culinary professionals that we've mobilized to work with a lot of our chain account partners to develop some unique recipes and do things at source, utilizing a lot of the really tremendous skills that we have in our Thai Union operations with our labor force. We can do really unique, special things, and we've been able to start to mobilize that and sell it into our food service chain accounts. So those are some of the things that we've done best.
Okay. Jörg, when the liquidity has become more crucial, sometimes even more crucial than the profitability these days, how do you safeguard the company cash flow? And what are the key challenges in operating business in the current and near-term environment?
Yeah, thanks, Kumbest. And look, it starts with what Brian and Paul presented a little bit earlier on. It's the focus on the customer and the focus on the consumer, and how can we understand much quicker how trends are shifting and how decisions are being made. I think it's a balance between control, and there's of course always an immediate instinct to increase your controls in a crisis situation. Of course, and we have to, we need more control in a crisis situation because you do not know which risks spin into something that causes us to lose liquidity or lose cash, and which risks are manageable and remain under control. So of course there is more control required, but our focus was during this crisis to have a very close connection with the business, and in many ways this crisis helped us to communicate a lot more. I've not seen Paul and Brian as often as I have seen them during this last 4, 5, 6 months. Well, maybe not in person, but through Zoom calls and video conferences, and there's a lot more communication happening. So what changes? The speed of decision changes. I think in the past we looked at quarterly reports, monthly reports, we looked at strategies, and now we look at a daily report. We need a transaction. You really look what happened yesterday. Which customer has told us he can't pay or he is in a difficult position, and then tomorrow we need to stop a shipment or address things. So I think the whole topic around decision cycles, speed of decision making, being much more in touch with the real business operations day by day, I think this is one of the biggest changes and requirements. I had dinner yesterday with a couple of CFOs here in Thailand. We have a small group where we share our learnings and how can we improve together. And the message there is exactly the same. Everyone looks at liquidity, reducing cash burn, and securing your cash position day by day. And that's, I think, what really is changing the speed of decision making and the way how you look at what does the customer want, what does the consumer want, and how is your supply chain reacting to it. This is, I guess, the biggest change.
Okay. And on Patrick, I would like to ask if there is any change in our strategy as a result from this. We are going through this COVID-19.
Apologies, I just have a construction here that just started. Can you still hear me? So that's you see the beauty of working remotely live. So Kunbest, look to your question. No, it didn't change our overall strategic direction. But of course, there have been tactical and operational adjustments to react to the situation and to the new normal. In terms of our overall strategic focus, Thai Union has outlined its 2025 strategy under the theme of healthy living, healthy oceans. Now, this means that our businesses are developing strategies to value up their portfolio with products that are nutritious and healthy, and we're pushing ahead to further our sustainability leadership. In addition, we continue to build and scale new businesses, such as Thai Union Ingredients, and we're investing in the automation and overall resilience of our supply chain. None of these strategic priorities have changed. Actually, we believe they're even more relevant today. Now, what has changed is operational focus and priorities on selected topics. Brian and Paul have talked you through some of the changes in focus on the commercial side. Our operational teams are reviewing business continuity plans in the factories, are reviewing supplier strategies to decrease dependency and enhance resilience. And internally, we're looking at ways to streamline and automate processes and at ways to better connect with our colleagues and customers across the globe despite remote work and travel restrictions. But all of these are more operational adjustments and new ways of working rather than fundamental strategic changes. So as I said before, our strategic focus and direction haven't changed, but rather have been confirmed. Back to you, Kunbest.
Okay. And that has been concluding on the panel session. I mean, we have come up with a very valuable response from all of our participants and speakers today. And now I would like to open the floor for the Q&A session. Should there be any Q&A from the floor, please feel free to send your question on the comment box in either the MS Team or Facebook Live. Thank you.
Do we already have some questions from the team?
So there was some question coming in. For the market, having product to sell is the key to deliver the increased demand. The action are in place to improve the performance, the reliability of the supply chain factory. I assume that is there any way we do to improve our performance and reliability of our supply chain from and to the TU factory? For this one.
So look, I think the question here is, what are we doing to increase supply chain reliability and assurance that we can deliver to customers? And look, of course, a crisis like this does create issues and challenges in some areas. Our teams have been exceedingly agile and responsive in this crisis response. So maybe, Patrick, you worked with a factory in ASIP, in Portugal, in Ghana, but also here in Thailand. What have you done, or what have you heard, how people are improving supply chain resilience?
Yeah, look, as I said, or as I showed you before, at the factories, a whole host of measures has been put in place to just ensure that the operations can continue to protect our workers. And that, with one exception that I mentioned in Ghana, led us to a position where we were able to continue our operations across all factories throughout this pandemic. In addition, what we've done, I mentioned it briefly on my last point, is we have, with all factories, gone through business continuity plans. So planning what would happen should a factory close down. Paul mentioned before, what are the key SKUs, the most important products? How can we ensure that we have enough stock? How can we shift them how can we shift production through our global supply chain network to ensure that these products continue to get manufactured? So those are just examples of what we have done, put measures in place and just get to a different level of contingency planning.
And I think we have seen cases where we are shipping products from Thailand to some markets, even sometimes not fully looking at the cost impact of it, but really making sure we can reach the customer, we can reach the retail outlet, so we can supply the demand.
Okay, and for the second part of the question, this is more toward the market, so I think this is more directed to Paul and Brian. How are we prepared for the possible second of the COVID wave?
Paul here. Maybe I'll go to that first. It's slightly different this time. Looking at the retail scene in most countries, you're beginning to see some activity move forward. Yes, there is growth in some of the necessities, grocery necessities. But what we're seeing from retailers is they're putting quotas in place, so restrictive item purchase, so 2 or 3 items only. You've seen that in the UK already. You've seen that in Northern Europe. So I think the retail trade is very clear this time. Look, we have plenty of stock. Our supply chains are robust. Our supply chains are agile. There is no need to panic buy. And I think that message has been well received and communicated by the trade in most countries. That with sort of quotas in terms of item purchase, we're not going to see a spike like we saw, like I showed you in March. Having said that, we're still watching very closely. In some items, we're seeing it rising substantially, actually. Household products, sanitary products, etc., are rising again. It's just something to watch. The second thing from our perspective is just to make sure that our stock is in the right place. To Patrick's point, I mean, the plant's been very agile in terms of the length of our supply chain. We've shortened that supply chain to ensure that the product is in the markets and for instance, not sitting at factories, because factories, as you know, is in Ghana or Seychelles or Thailand. So those two things we're watching very closely, but we're not expecting anywhere near a peak that we saw in March.
Yeah, I don't think I can add too much to what Paul said. I think the reality, you know, we are really, really diligent. You know, these muscles that we've flexed for the last 6 months have become quite defined. The team is looking at these things each and every day. We're ready to respond. We've been able to kind of rebuild our positions over the last couple of months, and we're very much prepared. I think we're very collaborative and very communicative with our customers to make sure we're staying ahead together. Whereas before it was much more reactive. Now it's much more proactive, and everyone's really in a sense anticipating something. So we're all preparing for it, and we're fortifying our supply chain in support of it. So that said, it's all about our people, and it's all about making sure our people feel, you know, that at our factories, that they feel safe coming to work, you know, which they do, that we support them each and every day, and that's critical, and it's ongoing.
And I guess some questions from the audience to you, Brian, would probably be about the election in the United States. I'm sure that's a very interesting topic, but I'm confident we would need a second session to address those topics, I guess.
Yes,
do we
sir.
have any more questions?
Yes, I withhold on that. I withhold any sort of political response.
Thank God you saved us all. I think there is no further question from the floor, and we are running a bit into a time. So for the interest of time, Jörg, I would like to ask if you have any closing remark for our capital market participants here that have been joining us about our company and how are we looking forward.
Look, thanks a lot for joining today. We've kicked off a series of these webcasts, and we want to bring our executives closer to you. We want to bring specific topics closer to you about Thai Union. We feel that in this crisis, and we are approaching the second wave in this crisis, we need to communicate more. We need to make ourselves more available, and we have found this platform quite useful to give more information to you. So please come back to the IR team, come back to me or any one of our executives, and we'll continue these sessions so that for you, you can make informed commentaries about Thai Union and feel good that management knows where we're headed. Yeah, and I guess with that, we are closing the call, and we will all see you again in 4 weeks' time for Q3 results, I guess.
The result will be out on the 5th of November. Okay, so looking forward to see you again there. And this concludes the knowledge session for Thai Union, the pandemic and the way forward. We hope this session could be useful to you. Thank you very much for your time and interest in participating in the event today. We wish you all have a good day and good health. Thank you very much.
Thanks a lot, Brian, Patrick, and Paul.
Thank you.
Thank you, everybody.
Bye.
Bye-bye.
Bye.